Welcome at the Business Analysis Method, the model that provides insight in one oversight. The question behind this model actually is quite simple. The world is changing, fast even, and how does your company change along? Externally, the changes are happening and you will have to make sure that your company changes along. So if we take a look at the macroeconomic changes, demographic changes, political changes, economical changes, those long-term changes make sure that your company has to change along. Get an insight into these changes. But not just the macroeconomics, also the industry level, the competitor level, the customer level changes, mesoeconomics. What are the changes and how will these changes influence your company? And since the world is getting smaller, cultural differences will also impact your company. The difference between Americans and Indians, Europeans, Germans, people from Poland, from the Netherlands, all cultural differences. And how do these cultural differences influence your company? External changes influence the internal part of your company. Internally, I focus on customer, because the customer is the wallet of your company. You have an offering that you can use to lure your customer into your company, and those customers then provide the revenues of your company. Your company will have to make sure that the offering is provided. Company takes care of the costs. Revenues minus the costs is the profits. Let's focus on the customer first. If the customer is not paying the bills, you'll never make any profits. And the way you actually lure your customer inside your company, make him choose for your offering, means that you have to make sure that you focus on what you're doing. Marketing, sales, the channels that you can use, the assortment that you have, all have to make sure that the customer is actually choosing for you. Customer and offering, commercial side of the company. Customer offering leads to revenues. If the revenues are therefore down, I am absolutely sure that this has to do with either the offering or your customer. Customer and offering, part of the commercial side. Offering and company is the operational side of the company. You have to focus on the company. That's where you can increase your profits. How? By focusing on the processes. If you focus on the processes, you can lower your costs. By improving and engaging your personnel, by better leadership. So the inside of the company is an important part as well. The company takes care of the costs, and revenues minus the costs is profit. Interesting. But why would you want to use this model? If you feel that you can improve your profits, or you need to improve your profits, it either is because your costs are too high or your revenues are too low. And your costs are too high because on the internal part of the company, things will not go right. Your revenues are too low because you cannot actually get your customer to pay the bills. So if you want to improve your profits, you actually need to see inside the profit and loss statement, the balance sheet, where do things go right, where do things go wrong. You'd like to see the trends, you need to benchmark your profit and loss statement with that of your competitor, for example. And what you then want to do is take a look at the critical success factor. In this case, you want to improve your profits. The target could be 10% more profits by the end of the year, and it's the responsibility of the CEO. A task card. But your profits come from either better revenues or lower costs. So if you want to focus on the cost, there will be a different task card. Critical success factor in this case will be lowering your costs. With a target, before the summer, you need to lower your costs by 5%. The responsibility of a certain person within your company. And that a certain person, that responsibility is very important because elsewise, you don't go anywhere. Just saying that we need to lower the cost within the company is not good enough. but your costs come from within the company. So you have to take a look at where exactly do these costs come from. Is it the processes? That you can improve the processes? Then you have critical success factor, improving the processes. With the target, before the end of the year, we'd like to have less mistakes, less faults. And that's the responsibility of head of operations, for example. Profits are revenues minus costs. So one thing would be looking at your costs within the company. The other thing would be trying to improve your revenues. But your revenues come from the offering. And your offering, again, marketing, sales, channels, and assortment. So maybe you'll focus on sales and say, if we need to have higher revenues, we need to have better sales. For example, better sorts of sales, better choice of channels. And maybe you'll say, instead of just transactional selling, you need consultative selling, or enterprise selling, or different sorts of selling. Marketing improvement, sales improvement, channel improvement, it all leads to a task card. In this case, we want to improve the sales, so that most likely will be the responsibility of head of sales. And before the end of the year, you need to have 10% improvement of sales, measured by the number of customers, for example. Customers and offering lead to revenues. Company leads to costs. Better revenues, lower costs means higher profit. That's what I call the business analysis method. It's like a thermometer that you can put inside your company within the different silos of your company to see what you can improve, where you can improve it, how it needs to be improved, and whom is responsible for that improvement. My name is Alex Klein, and maybe I can help you with masterclasses, workshops. Maybe you'll have some questions. Please contact me at alexklein@profitabilities.eu, and I'll answer your question. I look forward to them. Thank you very much for watching this tutorial on the business analysis method.